Janet Yellen just dropped a bombshell on the stock market. Now, it's not like we don't have enough to worry about. The 10-year Treasury yields are rising, stocks are dropping, and we have inflation scares. But now we got something else on top of all of that that is putting downward pressure on stocks that we need to go over in this video. But I will say it's not all doom and gloom. There is a bright side to all of this, and there is a way to make money as well, which we are going to discuss in this video as well. But first, a word from our sponsor. Oye, Papo, come here. I got a secret to tell you. Did you ever hear about this dude from We Are Investing, Sean? He's awesome, man. And his Patreon, it gives you access to a Discord server of over 400 investors where they talk stocks every single day. Check out a stock that he called out last week and how it's been performing since then. HOFV. It's on an absolute tear. And if you were part of the Patreon, you would have known about the potential with this stock. So stop wasting your time and join. The link is provided down below. All you gotta do is click on it. Welcome back, mi gente. This is Sean from We Are Investing. And now that we got all of that out of the way, let's get into this video. Now today, Treasury Secretary Janet Yellen and Fed Chair Jerome Powell testified in front of Congress for the economic relief. Now, to be honest, it was a lot of blah, blah, blah. It was 2.5 hours, which was extremely boring. It was dreadful to watch the entire thing. Not much was said. When it comes to monetary policy, there wasn't any new information. Jerome Powell doesn't think inflation is going to be a real thing. And also, he's not even thinking about raising interest rates. However, on the other hand, he says if there is inflation, we'll rise interest rates. So is he thinking about it or is he not thinking about it? I'm confused. But anyways, that's the deal. There was no new information when it comes to monetary policy. However, out of that 2.5 hour thing, there was some good questions. And there's things that we need to talk about because I think it paints a picture for what we could be talking about in the future and what's probably going to be impacting the markets. But although this will negatively impact the overall markets, there will be sectors that prosper from this if it actually happens. So with that being said, we need to discuss it. And then we'll talk about what we can do, how we can set ourselves up to make money in the long run. So with all of that being said, let's play a clip from this hearing and then we'll analyze it in further detail.
Secretary Yellen, and I'd ask you, please respectfully, if you could keep your answers brief. As the country begins to safely reopen and our economy recovers, is examining changes to tax policy the correct direction?
We expect to examine changes to tax policy along with programs that will address some of the long-standing problems that have held down productivity and labor supply in the United States. We'll address infrastructure, risks from climate change, education, training.
Let me ask you, ma'am, Secretary, what impact would this action have on jobs and workers' wages?
I think a package that consists of investments in people, investments in infrastructure, will help to create good jobs in the American economy, and changes to this tax structure will help to pay for those programs.
Well, Secretary Yellen, what tends to be the impact, I guess I'd ask, on the American consumer, my constituents, when corporate taxes are raised? Do the costs usually tend to be passed down to them?
The impact of changes in corporate taxes have been studied by economists for a long time, and the impact of them on prices and on consumers are very unclear from existing studies.
Well,
we do need to.
Go ahead, please.
We do need to raise revenues in a fair way to support the spending that this economy needs to be competitive and productive.
So
And
let me just
an
say this,
increase.
Secretary Yellen, if I could. I think we know.
All right, I gotta stop it here, guys. This is a ginormous red flag in my personal opinion. The fact that she said it's unclear whether raising the corporate tax rate is going to negatively impact the economy, even though there is a lot of historic data, is very concerning to me because I know that they are going to propose to increase the corporate tax rate. And if they're unsure of what the consequences might be, that is very, very scary.
We know that raising the corporate tax rate results in higher costs for small businesses, schools, and American households. Then why is this country begins to reopen and recover economically would the Biden administration um, be proposing tax policy which would, in the end, hurt the American family and millions of struggling small businesses?
The Biden administration is not going to propose policies that hurt small businesses or Americans. The Biden administration is going to propose investments this economy has long needed to be competitive and productive, and
Well,
support
with
for.
all due respect,
Another good point. The second thing here is raising taxes right after a pandemic when the economy is trying to recover. That is a horrible time to start raising taxes, in my personal opinion.
respect, ma'am, I would say this: certainly raising taxes on business and industry is going to affect consumers and households and American families in a very adverse way. Is this being proposed, these tax increases, to offset the costs of the recently enacted partisan stimulus package, ma'am?
No, the stimulus package, the American Rescue Plan, was not funded with any increases in taxes, but a longer term plan that addresses
But it
critical
really
needs of
hasn't.
this economy probably would be accompanied by some revenue raisers.
Yes, I'd say so. And I'd say that the plan as it exists right now hasn't been paid for. For example, let me just say this. Last month, lumber prices hit an all time high, doubling in price from just 3 months ago. Gasoline prices jumped 6.4% over the previous month, while electricity and natural gas prices rose 3.9%, not to mention housing prices and other manufacturing supply chain goods. Are these steady increases a sign that once the economy fully reopens, we're likely to see parts of the economy where demand is intense, at least for a period of time, leading to some additional, I think, price pressures? Let me ask you this, Chairman Powell, in my limited time. You could you describe in detail the wide range of policy tools the Fed has at its disposal to address what is obvious inflationary pressures that we're seeing already?
So at the end of the day, what can we take away from this? We spent $1.9 trillion for a stimulus package that had a lot of wasteful stuff. And now we're trying to spend another $3 trillion on an infrastructure package. We need infrastructure. They talk about this every single year. Every election, it's a topic. We need to do something with our infrastructure. It's lagging. It needs to be repaired. And we need dollars being put into infrastructure. In my personal opinion, if I ran the government, I would have rather used that stimulus money towards infrastructure and put people to work rather than giving people that are already gainfully employed extra money to put into the economy. Get people jobs, get people working, get people being productive, and that's the best way to increase the economy. So I don't have an issue with the infrastructure package. I have an issue with all of the spending. But I don't run the government. I'm not making decisions here. And they already spent $1.9 trillion and now they want to spend another $3 trillion. In order to do so, they are going to have to raise taxes. But regardless of what happens, what we can take away from all of this is that there's a possibility that a ton of money is going to be put into infrastructure. And that is what you need to focus on. Do you have exposure to infrastructure? And don't just go chasing the green energy stocks that have high valuations. get down into the nitty gritty of what really would pass, what the majority of this infrastructure will include. And that's going to be infrastructure including roadways, including bridges, including dams, wastewater treatment plants, the infrastructure, the backbone of our economy. This is the foundation. This is how we live. You can sprinkle in some green energy stuff in there as well, some alternative energy stuff, but definitely build a position that gives you broad exposure to all types of infrastructures, especially roadways and bridges, because that is where the most money is going to be spent. Look at engineering firms. Look at companies that deal with steel and concrete. Look at construction firms. Those are the type of companies that are really going to benefit if we see a massive infrastructure package. And I think it's wise to gain exposure to all of this. And they are dipping right now. And right now is a great time to start a position and build into that position. Now, this is not something new. This is something that I've been eyeing up for quite some time now. And that is why on the Patreon, I mentioned this before, and we have a dedicated server just for infrastructure stocks. And I'm pretty much buying these stocks on the daily. I'm adding to them as they dip. They've been dipping over the last couple of weeks, and it's been a great time to add to that position and strengthen that position, because if this ends up being passed, those stocks are going to skyrocket. But anyways, guys, that wraps it up for this video. I thank you so much for your time. You already know that. Return the favor by smashing that like button. And if you're not subscribed, subscribe to the channel and ring that bell so that YouTube will notify you as soon as I make any other videos. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. See ya.